Welcome to Morpheus Trading Group. Today's technical presentation is a follow-up on the status of the New York Stock Exchange composite $NYA.X. And we've been, over the past week, have had several presentations that we posted regarding a head and shoulders pattern that had been forming on the NYSE, and that we felt very strongly that the market could pull back here, and that we could see a pretty significant and severe sell-off. Part of what we do at Morpheus Trading is to keep our clients out of harm's way by closely monitoring the market and having a good understanding of market internals, and when there are high probability times when big pullbacks can occur, and of course when we're in an uptrend, high probability times when a breakout is likely. But at times like this, we can lose 20, 30, 40% of our portfolio in short order if we're not in tune to what the market is telling us. And this is why with our proprietary models and also technical patterns that are very commonly known, when we combine these with our proprietary models for determining momentum in the market and determining the strength of the internals of the market, it can be very powerful combination in protecting capital. You'll notice that in this pattern we eventually did break the neckline last week. It was definitively confirmed on Thursday when we had this over 400-point sell-off day. On Friday, you may recall, in Friday's presentation, we stated that we very well could get a bounce at the current levels, just below the current levels, because we were coming into support. This is the weekly chart on the New York Stock Exchange, the weekly chart, that we were coming to a support level of the 200-period moving average. And in fact, look what happened. We undercut the support level, which is perfectly common, and we rallied back up and are currently clinging just below support on the weekly chart of the NYSE. What that did is that prevented us from overtrading and being short in the market on a day we knew there could be a whipsaw action, as in fact there was. Now the question becomes, as of this recording, it's Sunday evening, the 7th of August, and currently the futures markets are down. The NASDAQ futures and the S&P futures are down about 2.25% each, and as is the Dow. Which of course suggests that if the futures markets stay weak, then Monday morning we would expect a gap down and a retest of the lows of Friday around the 7,200 mark, this red line right here. If we retest these lows and break them, then it's quite likely that we'll sell off and move to the predicted drop level and even undercut it somewhat. And that's not uncommon during times of volatility, because when you have fear in the market, panic in the market, you're going to shoot marks. You're going to stops or get swept. The weak hands are going to get washed out of the market, and that's about the time the market would reverse. Now, by no means are we looking to get long the market here. We believe we're in a confirmed trend reversal. How long that reversal will last, there's no way to know at this point. However, we believe it's very dangerous to try to be on the long side of this market, other than if possibly you're day trading, looking for momentum plays or swing traders. So what we anticipate with the break of this line would be the fulfillment of the head and shoulders predicted drop, an undercut into psychological support, probably somewhere around the 7,000 range, because that's a key down number, and we would sort of expect buyers to step in there. And then a rally, a pretty sharp rally. Normally what you'll see following these type of vicious down moves is a sharp rally, and somewhere, we could easily, it would not be surprising to see a rally back up into the neckline, even right around the 7870 mark, somewhere between 7,600 and 7,800, right in this range, and sometimes even a little higher. But it will be a violent rally in all likelihood, and that's where we'll look to get short into the rally. We would look to get short. Now, once again, we don't know until a pattern begins to form. But if we do see that rally, if that would occur, then certainly we're going to be looking to get short. If this rally were to occur, we would also look to cover potentially into a retest of these lows, because that's normally what happens. A pattern like this is you get a sell-off, you get a rally back into resistance, and then you get a sell-off back down to the swing low support, and then it becomes a question of how severe is the downtrend, how much staying power do the bears have, and how willing are the bulls to give their positions as to whether we head lower from there. If you enjoyed today's presentation and you want to learn more about how to protect yourself during vicious turns in the market and more about head and shoulders patterns, please join us at www.morpheustrading.com, where you can sign up for your free membership to receive technical analysis like this every day. Thank you for joining us.